morning, traders. Welcome to the weekly Elliott Wave Street update. I'm Juan Maldonado, and it's a pleasure to start this week with some of our wave counts. Today, we're going to check the euro, and the S&P. So let's start the analysis. But before, let me show you the ElliottWaveStreet.com website, where you can find under the membership area our live market analysis plans. We have Forex, stocks are the full access. Here you can have the list of the instruments that we cover on a daily basis. Plus, it includes access to the Members Academy with basics, risk management, strategies, tactics, and the Elliott Wave Crash Course with new lessons. So let's start here with the euro. What if we go to the weekly chart and we start talking about the price action from here? I'm going to hide also some of the waves, so it would be better to have here the price. All right. So look, the first support area that I want to show here is this one. If we connect the low from January 2017 with the low of, let's say, January 2020 and the low of January 2022, because something that I have been seeing is that roughly the euro is making each cycle per year, and that's really interesting. So let me show you. Of course, it's not precise as everything in markets, but roughly this takes a year. This takes another year, this takes another year, and this takes another year. Of course, we can have as a reference point January, but for example, like this year it finished on March, which is fine. You know, sometimes it's more precise. This one was precisely in January 2021. This one was also around March. This one was pretty close to January 2018, and this one was precisely on January 2017. So roughly, each cycle on the euro is going to be 1 year. So we have this area of support where the price precisely hits and starts bouncing. So we have a high probability reversal going on there. But one of the key advantages or benefits of the Elliott wave theory is the fact that we can solve so many questions. For example, when the market is going down, we're going to have a retrace and the market is going to continue, and a retrace, the market is going to continue, a retrace, the market is going to continue, but eventually it's going to have a retrace and the price moves down and then continues higher, right? So the big question is how we can find the one that works, right? And the Elliott wave theory is going to help us with that, because if we have a 5-wave sequence and then a 3-wave sequence down, 5 and 3, that's where we can start thinking that this is a higher probability setup. So let's make this exercise here on the live chart. I'm going to zoom in a little bit more. So there we go. First of all, we have this 1, 2, 3, 4, and 5. And then we have the A, B, C, right? So the markets are fractal. So we're going to wonder, okay, is that it? And the market builds the 1, 2, 3, 4, 5 sequence here, telling that we have another impulse. And yesterday during the afternoon, we have the price moving back to this area. And I went long at this green candle right here. Of course, I shared the trade with my clients inside the membership. And it was an interesting area because we have the price finishing wave 4 right there, finishing wave 4 right here, and wave 2 was testing this area again. And we have a tail under the support, and the candle closes green, so that was really interesting. So I trigger my trade right there. I leave a protective stop loss at the 108.95, so just under the low. And the price overnight was able to move to the 110.19. The entry was at the 109.44, and that was a good distance because it was 75, 76 points from the entry. So at the 1-to-1, this morning I closed half of my trade. So I like to risk just 1% of the account. So that was roughly 50 points of a stop. And let's make an example with 10 lots, right? So at the 1-to-1 I close half, so 5 lots, right? And I'm going to leave my trade open with the original stop loss because it's a risk-free trade right now. So today during the New York morning, the price is going down, so that's fine. We can adjust that this could be a deeper retrace. The plan is to have a bounce back here above this area to give an additional confirmation. So that's fine. Of course, the market is going to move, it's going to show some noise. Look at this one before the continuation down. So that's part of the plan. It doesn't matter, but it's already a risk-free trade on the euro, right? So let's see how it's going to work out. I really like it. Let's have a look at another example, the S&P. The S&P is fantastic because I was thinking that this could be a leading diagonal wave, 1, 2, 3, 4, 5, as an impulse. And then I was looking for an ABC down. And look what we have here. Here we have a nice rejection of this candle. That was pretty good, pretty interesting. We have that could be an entry, right? So in case that we went long there, I didn't trigger there, but let's say that we went long there, there are two options to play stops. One is just under this low, and the other one is under this low right here, some points under the low, right? Because sometimes the market is going to make this, is going to try and reverse. So in case that we leave the stop loss here, because that was a beautiful entry to go long, in case that we have the stop loss just below this low, will take us out, which is fine, just a little loss. And if we leave it here and we were saved because we had some points, I always add some points to the low, like the one I did on the euro. So we are fine, right? And if we didn't trigger because we didn't like it, here we have an aggressive entry, right? And if we didn't trigger that one, here comes the next one. So this is going to complete wave 1. And once we have the retrace, I'm going long. See, the same trade I did on the euro. So once the price moves down and we have during the road a nice tail down here, something that tells that the market is not finding more sellers, that's where I want to jump into that trade to follow wave 3. I believe that this is the bottom on the S&P. And the S&P is ready to start climbing back to the break-even this year that started at the 4,800 area, and we are in a deep discount. So it seems that the S&P is starting to recover finally, and this attempt to crash, this attempt to move under the low has failed, and we are back on track in the bull move. So waiting for the test or wave 2 in the Elliott wave theory or the throwback to make sure that we don't have any more sellers, right? That's the institutional process, and then we can have a green light to follow the move up. All right, traders, that will be the plan here on the S&P. If you want to get access to all the details and all the plans that we have inside the membership, that trust me, we have fantastic information, Elliott Wave information inside in all these instruments with detailed trading plans that you're going to find on the daily videos, plus all the education and everything. Is a fantastic membership. So I'll see you inside. Please have a fantastic week. And if you have any questions, contact us. Take care. Bye-bye.